Hi everyone and welcome to my channel. Just a quick reminder, my content is for entertainment purposes only. All of the messages I share come through the pendulum with the help of my spirit guides, guardian angels, and any invited spirits who choose to join us. While I do cover a lot of politics, I also dive into a range of hot button issues, current events, and hidden truths. If you enjoy this kind of content, please hit and subscribe button. It costs you nothing, but it helps me share these messages with more people around the world. Thanks for being here, and let's get started. Hello, spirits. We're going to test your knowledge on Treasury bonds in the United States. So, from my understanding, Treasury bonds, often called T-bonds, are long-term loans that investors make to the U.S. government. When you buy a Treasury bond, you're essentially lending money to the government in exchange for a guaranteed interest rate over a set period of time, usually 20 to 30 years. At the end of that period, known as the maturity date, the government pays you back the full amount you originally invested. They are considered one of the safest investments in the world because they're backed by the full faith and credit of the U.S. government. Treasury bonds are used to fund everything from infrastructure project and military spending to social programs and debt repayment. But when too many are issued or investor confidence is shaken, like political instability or economic uncertainty, it can cause interest rates to rise, markets to wobble, and the pressure to mount on everyday Americans. Understanding how these bonds work and why they matter is key to making sense of today's financial headlines. So I have a list of questions that I'm going to ask, and my spirits are going to give us the answers. So the way the board works is yes and no, up and down, or yes is up and down, no is left to right, no more words is a counterclockwise circle, and maybe is a clockwise circle. When it gets to the point where it can turn around, there it goes, clockwise circle. Okay. The board, the divination board, has the days of the week, numbers 1 through 24, the months, and the alphabet. So it can spell, it can give me a date, and give me a number, it can give me a day of the week, depending on the question that I ask. So I hold the pendulum, sometimes like this, between my two fingers, right? Or like this with my thumb holding it in there. Today, for now, I'm going to hold it like that because I think I'll be able to get through it quickly. So this is to help the everyday American understand both the positives of the U.S. Treasury bonds and the problems associated with the recent sell-off, including economic implications and potential resolutions. So we'll start with question number 1, if you want to center. Now, I am in the center of the divination board, but on the camera it looks like I'm closer to the bottom right-hand corner. So when it goes to a specific answer, it may look different to you, but I will call out the answer and they will tell me yes or no. So, first question. Are U.S. Treasury bonds generally considered a safe investment? Yes. Can Treasury bonds help stabilize the U.S. economy during global uncertainty? Yes. Multiple choice. What is the main purpose of issuing Treasury bonds? A, pay off existing debt. B, fund government spending. C, strengthen the dollar. D, create jobs. Are you pointing to B? Yes. B is fund government spending. Did the recent bond sell-off create fear among international investors? Yes. Was the bond sell-off primarily caused by rising inflation fears? Yes. On a scale of 1 to 5, how severe is the impact of the Treasury bond sell-off on the average American right now? 1 being low, 5 being high. Three. Is that correct? Okay. So it's mid-range, moderate. Is it a growing concern? Yes. Do higher Treasury yields mean higher borrowing costs for the U.S. government? Yes. What group, multiple choice again, what group is most immediately affected by the increase in yields? A, retired citizens, B, homeowners with variable mortgages, C, the federal government, or D, all of the above? Are you pointing to D? Yes, D is all of the above. So retired citizens, homeowners with variable mortgages, and the federal government. Will higher bond yields eventually raise interest rates on credit cards and loans? Yes. Is there a risk the U.S. could lose foreign interest in its Treasury bonds if volatility continues? Maybe. Do strong Treasury auctions, high demand, help restore faith in the U.S. economy? Yes. Can the Federal Reserve lower interest rates to ease the bond market pressure? Is that a good idea? Or is a bailout a better idea? Bailout. And does a bailout mean printing more money? And does that generally increase the debt? Yes, for both of those answers. Did Trump's tariffs play a role in the recent bond sell-off? Yes. Are U.S. Treasury bonds still considered a long-term safe haven despite short-term volatility? Yes. Did countries around the world sell off many of their Treasury bonds due to the tariffs? Did China sell off its Treasury bonds? Did Japan sell off its Treasury bonds? Did Mexico sell off its Treasury bonds? Did Canada sell off its Treasury bonds? Okay. Our U.S. Treasury bond, on a scale of 1 to 5, multiple choice, or range, how confident are global investors in the long-term reliability of U.S. bonds? So on a scale of 1 to 5, 1 being low, 5 being high, how confident are global investors in the long-term reliability of U.S. bonds? Five. Is that your answer? Yes. So is there high confidence but a little bit of hesitation? Yes. Is the U.S. government actively managing the crisis to protect citizens from a financial fallout? No. Multiple choice. Which of these actions could help resolve the bond market tension the fastest? A. Cutting interest rates. B. Halting new tariffs. C. Issuing fewer bonds. D. Reducing federal spending. Are you pointing to A? Cutting interest rates. Are U.S. citizens being clearly informed about how the bond markets will affect their daily lives? Is it likely the bond market will stabilize in the next 3 to 6 months if no new shocks occur? No. Will lowering the interest rates help the bond market? Is the only real resolution to this problem a bailout? Yes. So what is the dollar amount using digits that the bailout would need to be? So 4, 7, no, 8, oh, sorry, 9. Are you still going? 0, or 10? Is it 4, 1, 0? Or 1, 0, 1, 2? Is that the end of the number? Yes. Is that in millions? Is that in billions? No. Is that in trillions? So the bailout would have to be 410 trillion, 12 billion? Wow. Is that correct? 410 trillion and $12 billion. Or is it 4,102,000,000,000 and 1,000,000? No. That's a lot of money. Will the China trade war be resolved? Yes. Will the US dollar become the non-standard currency for the world? Will the BRICS dollar take over? Yes. How many months until the BRICS dollar takes over? $13 months? Yes. Well, thank you for your financial information and answering my questions. If any of the viewers out there have any additional questions you'd like me to ask, please leave them in the comments, and I'll do a separate video with all those comments. Thank you to my spirits.